David Owen, Chief European Economist at Jefferies International. David, always good to see you. I mean, let's just kick off with the Fed there. We hear it from Jeff Lacker there. The Fed has a dual role on inflation and notably on unemployment or employment, separating itself away from the ECB. So looking at the employment situation in the States, one wouldn't be surprised to get QE3, even though things are improving.
Yeah, I think everything's relative to expectations. I mean, there is a recovery in the US. It has surprised on the upside, although I have to say, my colleagues in the US actually did expect the US to perform well this year, and that's what's basically been happening. But at the same time, it's not a very strong recovery, and we still think that there's a bias on the Fed, whatever's just been said, to keep the accommodation on the table. It wouldn't take much, in our view, for them to announce additional QE in June.
And the bias there is to ease. QE, how might it look?
Buying MBS, basically. It's basically to help the housing market, which remains a very strong concern in the US, even though we've got signs of the US housing market having bottomed and non-distressed property prices actually rising. But the thing here, they still have a bias to ease, particularly Ben Bernanke.
Is the UK surprising on the upside for you? We've had quite a few surveys out in the past week or two suggesting that, despite what the OECD says, into recession, actually going, well, manufacturing's not too bad, services not too bad.
Yeah, I mean, things could have been a lot worse. I mean, going back to, just before Christmas, we could have been staring over the abyss. I mean, the Eurozone looked at that point to almost be breaking up, and the big concern was if the Eurozone was to break up, then the UK would be obviously affected by that. So we've stepped back from that, and we're not actually at the moment seeing GDP declining. GDP is more, in my view, flatlining. There is some survey evidence surprising on the upside, but then at the same time, the monetary data is still very, very weak. And moreover, credit conditions, according to the latest Bank of England survey, are actually beginning to tighten again. So we're not out of the woods at all.
When you talk about the Bank of England, of course, we get an interest rate decision at midday today. I suppose the big question is so much what happens today, but what happens next as far as further stimulus is concerned. Yeah,
I think today is an undecision. I think we had obviously two members of the MPC, Adam Poster, but also David Miles, voting for additional QE last month. But I think the decision today will be to delay the decision basically till May. May is the inflation report month. Spencer Dale was talking about a new suite of models that the bank is now using to forecast the UK.
About time, UK inflation, yeah?
Well, exactly.
About time they've got a new model, maybe.
And, I'm sure that they'll be going through the simulations and the results of those. So, I mean, at the end of the day, I think the decision is more likely to be taken in May, whether to do more or basically to keep the powder dry for now, just in case the economy rolls over. But the economy in the UK is not doing particularly well. It's just, I think, relative to expectations. We pull back from the abyss, and some of the data flow has been surprising, thankfully, on the upside.
And has the fact that we pulled away from the abyss been down to the QE from the Bank of England?
Really, no. I mean, the big concern...
What effect do you think it's had?
Well, I mean, it's helped, and without the QE, GDP would have been a lot weaker, and inflation ultimately would have been a lot lower. But the big game changer in terms of, the outlook over the recent months, of course, has been the ECB, flooding their system with liquidity and stopping the Eurozone banking sector basically going down around it. So that's been the big game changer. It hasn't resolved all the issues in the Eurozone, far from it, but that's been, one thing that's kept the UK going.
You see, we're talking about inflation and the model here in the UK, but it would appear also that inflation is starting to bind the hands of the ECB, notably when you look at the inflation rate, wage inflation in Germany as well. Is it becoming more of a problem for the Eurozone?
Well, I think it's getting more interesting in a sense, because we've got Germany quite clearly surprising on the upside. And, if you look at the German data, German unemployment now is almost back down towards 5%. Wages, as you've just described, have accelerated. The money supply is picking up. Even the housing market's been recovering. And so I think Germany can certainly surprise on the upside, but you've got the rest of the system in a pretty bad space. And, question marks, severe question marks over Spain now, but also, of course, Italy, as well as the rest of the periphery, and even some of the AAAs coming under more scrutiny. So, for Mario Draghi, the decision is not clear at all, but I think going forwards, they have to cut rates. And, we still expect them to cut rates in the second quarter. He takes a view that he's looking out, as Mervyn King, over a 2-year time horizon, and he'll be looking at inflation still undershooting target.
Well, that'll go down well with Jens Weidmann, won't it?
No.
David Owen, we shall leave it there. Chief European Economist at Jefferies International. Thank you very much.
Yes,